getting exposure to artificial intelligence by investing in Vanguard's technology ETF, ticker symbol VGT. We all know that artificial intelligence is the wave of the future, right? Shout out to my subscriber who suggested I do videos on artificial intelligence. It was a great suggestion. So just by doing my research, I'm like, wow, this is the wave of the future. So I'll be doing numerous videos on different ETFs to get exposure to artificial intelligence. They're using AI in medicine. They're using AI in weight loss. They're using AI in everything. So it is absolutely the wave of the future. And I'm going to be giving some ETFs to get exposure, maybe even some individual stocks, right? I mean, I believe a lot of these ETFs and individual stocks are millionaire makers. Make no mistake, these are absolute millionaire makers to make one wealthy. So, in today's episode, we're going to talk about VGT, Vanguard's offering for exposure to artificial intelligence, Vanguard Information ETF. Let's jump into my computer. So here we are on the Vanguard website with their offering for technology exposure. Vanguard Information Technology ETF, ticker VGT, is their offering for exposure to everything technology related. As you know, artificial intelligence or AI is going crazy right now, and it is driving almost everything. So it is also offered as an admiral share, right? So VGT is an ETF, and like all ETFs, you can buy and sell any time of the day as little as $1. It's also offered as an admiral share, which is a mutual fund. Same holdings. The mutual fund is called VITAX, which is Vanguard Information Technology Index Fund Admiral Shares. But the difference is the investment minimum is very high. Obviously, $100,000 is a very large amount. But you can get the same exact thing by buying the ETF. Right? So if you don't have $100,000, just buy the VGT, right? So it's an index style, so it tries to track an index on the risk reward from one, which is less risky, to five, more risky. It is five, more risky, which makes sense because it is concentrated in one sector. The expense ratio is 0.10, which means you will pay $10 per year for every $10,000 you have invested. So it seeks to track the performance of a benchmark index that measures the investment return of stocks in the information technology sector. All right? It's passively managed using a full replication strategy when possible and a sampling strategy if regulatory constraints dictate. All that means that it's following an index. It includes stocks of companies that serve the electronics and computer industries or that manufacture products based on the latest applied science. So this is technology, this is artificial intelligence, this is computer, this is companies involved in artificial intelligence, semiconductors, all of that. We're going to get to all of that. So let's look at the returns. The return of VGT year to date has been about 8.6%. The 1 year return for VGT has been 37.09%, which is great. The 3 year return has been 14.45%. The 5 year return has been 22.29%. Again, it's pretty good. And the 10 year return is great, 20.39%. That's a great 10 year return. Since inception, the fund has been in existence since inception. The fund has been in existence since January 26, 2004. So it's over 20 years old. And the return over that 20-year period has been 13.26%. But I love that 10-year return of 20.39%. So to buy one share of VGT, it's going to cost you about $495. But you may be able to buy fractional shares depending on the brokerage platform you're using. Let's look at the portfolio composition. There is 313 stocks in the VGT ETF, and the median market cap is $345 billion. So half the companies are above that, and the other half is below that. So pretty good sized companies. The PE ratio is about 36. So these companies are richly valued, okay? Compared to the S&P 500 PE ratio, which is probably about 20, I believe. Now let's look at the sectors in VGT. So just remember, all of these sectors that have to do with information technology, semiconductor involved, which are companies involved in making the actual computer chips or the brains of the computers. So the largest sector in ETF is the semiconductor sector, representing 27.2%. So these are companies that are involved in making computer chips. The next largest sector would be systems software, right? So these are companies that make the actual software to run on the computer, 23.9%. Technology, hardware, storage, and peripheral, next is 17%. Application software, 14.3%. Everything else, communications equipment, electronic components, electronic equipment and instruments, manufacturing services, internet services, semiconductor materials and equipment, IT consulting and other services, they are like very low percentage. Technology distribution, okay? So that is the weighted exposure. So now let's look at the holding. The top 10 holdings are going to be some familiar names. Microsoft at 18%. Apple at 15%. Nvidia at 11.76%. Broadcom at 4.24%. Salesforce.com. AMD, right? Some lesser known companies. AMD, Adobe, Accenture, Oracle, Cisco, right? So this is your top 10 holdings, right? Now let's go to page 2. So page 2, you have Qualcomm, 1.38%, Intel, 1.35%, Intuit, IBM, Applied Materials, Texas Instruments, ServiceNow, right? Micron Technology, Lam Research. So the companies become less familiar as you go down, but the bottom line is there's over 300 companies in this ETF, and it gives you exposure to a wide swath of technology companies. KLA Corporation, Synopsys, Palo Alto, okay, Marvell. So we get lots of exposure to different components of the technology industry. You see, we have gotten great returns over the last, 10 years or so? And even over the existence of the fund, it's been 13%. So you see that if you're trying to get some growth in your portfolio, this is not a bad way to go, right? You're definitely beating the S&P 500. It does pay a dividend, but like most technology company, it's not going to be a huge dividend. Let's see, the dividend yield is 0.73%. So not a great dividend. So year to date, we can look at the chart. In January, a share was trading at about $484. Now it's about $495, so not much change in the last 4 months. Let's look at the 10-year chart. 10-year chart, it was trading at about $90 10 years ago, and now about $500. So almost, so more than 5x. You would have 5x your money over the last decade, right? So great return. So if we would have put in $10,000 10 years ago with that 20% annualized rate of return over the last 10 years, our $10,000 would have turned into $72,000 without adding any more money, right? So our principal would have been $10,000 and our growth would have been $62,000. So VGT is something to consider, something to put on your radar or your watch list and consider to add some growth to your portfolio. It's great to have a portion of your portfolio into the S&P 500, but it's good to have a portion of your portfolio that is beating the S&P 500 and giving a boost or a growth to your overall portfolio. Again, guys, we have to keep ourselves educated and keep looking for opportunities. Again, guys, continue to send your suggestions for video ideas, and until next time, continue to command your money to grow. MD Investor out.